Hello, my trading friends. This is Tanya with Mindful Trading Solutions, and today we are going to talk about risk management, about always knowing your exit strategy before placing a trade. Please read this disclaimer before we start the video. Today I will be showing you several techniques that I use to decide where my exit strategy will be. Always know your exit strategy before placing a trade. Mark Douglas in the book Trading in the Zone, I like the way he put this. He said, I predefine the risk of every trade. I guess I just got stopped out. How appropriate. If you heard that sound in the background, that was one of my risks being defined, or me being stopped out of a particular trade. So anyway, I predefine the risk of every trade. I completely accept the risk, or I am willing to let go of the trade. And this is a really good policy to have. I believe that every trading book should start with chapter 1 being on risk management. And if you predefine the risk of every trade and you decide that you're willing to accept that risk, then it's good to go ahead and place the trade. Now, there's several different ways that you can decide where to place your stop loss. A stop loss gives us insurance against catastrophic losses, and the stop loss is so important because it's like the cost of doing business, and we have to realize that, hey, I just lost money on a trade, but that was the cost of doing business. And that's what our stop loss ensures, that we are not going to suffer more damage than what we can afford to suffer. And that's one of the hard lessons that we have to learn in trading, but it's an important lesson. So where do we place a stop? Or how do we decide where to place a stop? And this was a hard concept for me in the beginning. Now I'm going to show you three ways that I make up my mind where to place my stop. So this is a Tesla trade that I took in November of 2021. On November 16th, which was this day right here, it was announced that Tesla was going to be in the S&P 500. It was announced after hours on CNBC. It may have been announced earlier, but I saw it after hours on CNBC. And I had been waiting I was waiting for the breakout of Tesla. I was waiting for it to bounce off of this key moving average, the 50-day. And so I went ahead and placed the trade after hours. And that's a risky strategy, but knowing that I had a stop loss, I was willing to take that risk because I had a feeling that Tesla would gap up the next day, which it did. As you see, it gapped up, and I would have had to enter this trade at a lot higher price. And, it was a bull market. You could almost do no wrong. And so it was a good risk. But anyway, so where would I place the stop? Well, number one would be below a key moving average, which it was sitting right at the 50-day. So placing it, say, below the key moving average did not make sense in this case. So the other place I could put it is below the prior day's candle, the low of the prior day's candle, or I could place it, excuse me, we just got a black screen. Sorry about that. Just got stopped out of another trade. Market must be doing poorly right now. Anyway, how appropriate. Kind of shook up here for a minute. Okay, so anyway, the other place would be, see how relaxed I am because I know that I predefine my risk and I'm being stopped out of my positions right now. And, I know what my risk is. So I'm not really stressed out. And that's one of the neat things about predefining your risk. So anyway, so the other thing would be to place it below the prior day's candle. And another idea would be below the last correction, which would be down here. Now, in the case of Tesla, that was too far. So, and how do I know what's too far? 7%, I usually don't want to place a trade larger, or a stop loss larger than a 7% loss. And the reason being is once you go past 8% or 10%, the amount that you have to make to get back to even increases exponentially. In other words, at a 10% stop, I believe the amount is maybe 11% or something like that, that you have to that you need to gain to get back to even if you lose 10% on a trade. I'm not sure about that calculation. I'd have to look at the chart, at a table on that. But anyway, so in this case, I placed the stop below the candle of the prior day. But let me show you one of the things. This is a sheet that I use to protect myself. And before I ever place a trade, I pull up my sheet and I place the ticker, the earnings date. It's important to know your earnings date, because if you have an earnings that's the next day, your stock price could go could drop tremendously. And so Tesla's earnings date was not until January, so that was okay. The trigger price in that case was 154.50. By the way, Tesla was adjusted for splits, and I believe the price of Tesla at the time was somewhere around $500 or $600, but it split after that. And thank goodness I was part of the split. I think I sold it like right after the split, because it started rolling over, which is a whole nother video. Okay, then I placed my stop price in, and my sheet automatically calculates my percent stop, my dollar stop, and the risk amount that's what you have to decide. Now, in that part of my trading life, we were still in a bull market. Actually, we were coming to the end of a bull market, but I had, let's just say my total equity is 100,000. I was trading, my trades were a 1% risk. So I was willing to risk $1,000. Let's just say I had 100,000 equity. I was willing to risk $1,000 on that trade. And so my sheet will automatically calculate my share size. So here's my share size. It's the $1,000 divided by the $10.41, and it's rounded. And then my sheet gives me my total equity size. So I always check and make sure that the equity is no higher than a 12%. And then I like to put in, my sheet calculates what a 2R gain is, what, 2 times my risk. And so I like to look at my chart and determine if I think that the stock can go to a 2R gain, because I don't want to take any trades where I can't at least make 2Rs. So we'll just review. And reviewing, always know your exit strategy before placing a trade. And a good rule of thumb is to determine that I predefine the risk of every trade, and I completely accept the risk, or I am willing to let go of the trade. So knowing your risk going in is a very important concept. Now, some people say, do you place a hard stop? Or yes, I do, because I cannot be in front of my computer all the time. Like right now, I'm making this video. I just got stopped out of 2 stocks. And so I place hard stops. I think that's about it. So thank you for watching today, and till the next time.